Hello, everyone. Welcome to All Things Money, another episode. Today, we're going to focus on commodities, and we have Mr. Ahsan Mehanti, who is CEO of Arif Commodities, with us today. Ahsan Saab, how are you?
I'm fine, thank you.
So, Ahsan Saab, tell us what exactly do we do in commodities in Pakistan?
Actually, in commodities, there are two areas that people deal or citizens deals in the country, and that are on the physical side that you can see that gold is available. They are available in the common market, Sarafa. Supplies that gold to the markets, and we can buy from ordinary jewelers. So gold is primarily on the commodity side, which is actually a source of physical commodity. Then we have other commodities like which are readily available in the market in the industrial use. For example, cotton industries use, etc., etc. Several barleys and sugar, and some commodities are available on the superstore. Some commodities are used by the household. So there are several areas in commodities side. But we are, I mean, as a business, Arif Habib, we are a member of Pakistan Mercantile Exchange that trades in commodity futures. So, on the future side, this is something which is not available physically, and it is actually available, on the trading platform where you can buy and sell commodities just like you buy and sell shares on the stock market.
So let's talk about gold here. I think this is like a good segue. In Pakistan, it is possible to buy physical gold, a lot of physical gold, but Pakistan has barely imported any physical gold formally. Why is that? Why don't we formally or officially import gold? And whatever gold is available, um, how does that really come into the country? How does that work? How does the gold supply chain work out?
Actually, the gold is actually requires dollars. So if you go and you buy dollars from the market, and then begin an official import, then you have to come through those channels like custom duty, and that form is available. Some source which is maybe imported from the while people come from abroad, they bring bars, and that is how it is available. But it is Sarafa market, which is primarily a physical gold market, which actually supplies and determines the market rate each day. So it is quite a lot of unofficial market, which is actually source of gold in the country and for the jewelers.
So, when we trade on the commodity exchange, I believe those are future contracts, and those future contracts essentially are tracking the international market. Is there a contract which actually tracks a local market?
There is the local market is actually primarily dependent on the international market. For example, for the past 1 week, we have seen there's been regional uncertainty, and for that purpose, the gold prices have been continuously rising. So that is from the futures market that is actually determined from the Chicago Mercantile Exchange and the New York Mercantile Exchange. They actually trade in gold, primarily in gold, and they determine the market price, and that market price then goes to the local jewelers and the Sarafa market, and they determine the local price based on the international price. So what really happens is the international prices are basically reflected in the local prices. Whenever there is a change in international price, the local market adjusts itself. And especially if I call to the mercantile exchange, which is a formal exchange that trades in buying and selling of gold, and it does play a role in determining the prices as well. So the market maker at the mercantile exchange also adjusts prices on the base of international prices.
So, if anyone in Pakistan, let's say after watching this, they want to buy gold, what do you think they need to do?
Now, if anybody wants to buy gold in Pakistan, there are two sources. If they want an official invoice for purchase, they'll go to the Pakistan Mercantile Exchange, which is a gold provider. And the other side is the readily available jewelers that are they're stores in the across the country. They just go to the jeweler shop and they ask for the bars. Jeweler shop attentively, if they have the bars available, they will give in certain quantities. But if you need a bigger, it's a bigger order, they'll just go to the Sarafa Bazaar and they just arrange the gold from Sarafa Bazaar and just give it to the the customer.
All right, thank you. So, moving from gold, I believe the Pakistan Mercantile Exchange also had contracts for red chilies, and those are very popular contracts a while back. How do you think? How does that work out in the local context?
Actually, red chilies is something, a niche product that is, usually bought by, in the industrial side, they're bought by the corporates. And then, if they want to buy red chilies, they can come to the exchange. But, if they really want to buy red chilies, the red chilies are actually grown in Kundri. So anybody who wants to buy directly from the manufacturer or the grower, then that is produced in Kundri, Sindh or Punjab. They can go directly and buy from them. Other source of red chili buying is, yet they can go to the store and buy red chili. But if you are asking from the industrial perspective, exchange traded red chili quite a long back, and it was a pilot trade. Basically, the one of the institution or two, three good institutions which are buyers, for example, Shan Foods and National Foods, they come to the exchange and they buy directly from the buyers on the trading platform. So that is also a source where they can come to the exchange and they buy directly from the growers. But not unfortunately, we have seen the economy is too unofficial. The farmers prefer to sell over the counter rather than going through the exchange, because exchange has got its own hurdles for white money, etc. They have to be very official, so they prefer to sell the industrials that are buying from them directly to them rather than going through the exchange.
Yeah. So, what needs to be done to increase the share of, let's say, the formal trade in the market rather than just going over the counter?
Now there is not much a need to bring them to the exchange, or to bring them at a platform and then get them traded. So we know that there is a lot of demand for red chili in the country. Everybody uses red chili in the house. Everybody uses commodities in the house. In Pakistan, the farmer are able to sell those because there is a lot of demand. Even we have to import, for example, import sometimes import some kind of red chili as well. What I'm if a platform is not used by the farmers, it is okay, because already the any of the farmers produce, it's reflected in the GDP. I take example from India. For example, India has got exchanges as well, and those are commodity exchanges where physical commodities are traded. So in that exchange as well, not more than 5 to 6% of the total trade goes through the exchange, because exchange has got its own fees, and the exchange trade is recorded officially, and then the farmers have to pay everything in taxes. And there are a lot of taxes in the country as well. In Pakistan, we have seen the tax rate for an individual is it has gone to up to 35%. Then more, if he's earning a lot of money, so he has to pay 10% more. So in Pakistan, tax rate is 45% for any farmer. Why would he go to the unofficial channels and then determine his income and then pay 45% tax on that? So unfortunately, initially the farmers did not prefer going to the official platform. Now if they go to the official platform, they have to pay a lot of taxes, so they would not be inclined to go to the exchanges and begin trading in the selling their produce.
All right. So exactly, that's my point. What intervention do you think needs to be done to make the whole value chain more formal? I totally get your point that the arbitrage that exists between being operating formally and informally is too high. What needs to be, and we need to move to a situation where businesses work formally. What exactly do you think needs to be done such that there is more uptake of formal, let's say, exchange, commodity exchange products rather than just a booming OTC market?
Actually, I have a separate question to you, and that question is, why do you want it to go this official? Because there are three kinds of farmers. One are poor. Poor farmers are they can't deal with the taxation authorities in the country. So if they just go and officially trade on the exchange, one day all those trades would be taken over by the board of revenue, and they will just come to them and ask them to file returns. So why a poor farmer who's selling some produce, and he's not even eligible to file return, why would he go to the official market? So we just leave the small traders, small or poor farmers away
Obviously.
from this. Then we have industrial, farmers, or we have farmers which are rich farmers. So for rich farmers, if they come to the official channel, we have seen that the agriculture tax is there, and agriculture tax, if they begin to, and that proposal is still there, then in that case they have to pay those taxes, which, as we discussed, is up to 45% on their income. So why would they prefer to come to the official platform now? To bring them to the official platform, we have to engage the industrials that are buying. For example, National Food is a good buyer, of red chili. For example, there are several companies which are buying, the commodity trading, and they're buying cotton. For example, the textile mills are there. They buy cotton from the market. We can, enforce the mills, the textile mills. We can enforce the sugar mills, and we can enforce even all the commodities that are officially traded. I'm talking in the sense of the stock market. There are big corporates which are actually buyers of cotton, sugar, and wheat, and those companies which are buying wheat from the farmers. Okay, so they can actually buy officially through banking channels, and that is the way to go forward. The FBR, while they are assessing the return, they should ask, every purchase has to go through banking channel, and the buyer has to, give his accounting if he's not, putting that into his tax return, whatever his income is. So, FBR can make a check through that they should not allow any cash purchase of commodities in the country from the big industrials that they audit. So that will be a way forward, and that should be, introduced through various channels, that no purchase unofficial will be allowed. They have to go through the formal channels. In that case, all the farming system would come, at least the big farming system would come into the official records.
Yeah, that makes more sense because you need to make things more formal. Obviously, I agree with your point that the small farmer doesn't make sense, and actually going to cost a lot more to really bring them into the overall exchange business. So, what commodities do you think in Pakistan can really take off over the next few years, and particularly in the context of being traded on the exchange rather than on the OTC market?
I think that we have a bigger perspective, from the exchange point of view. We need to work on the building up the warehouses, and that warehouses, should trade electronic warehouse receipts, and those warehouse receipts should be traded on the exchange, and the banking system should come in, and the farmers should get the credit from the banking system instead of the RTs at the moment they are getting from the RTs. But we have to really see that our system, the present system, is working very well. No, we have to take it positively, because the pricing of commodities in the country, they has to have an international price, and that international price actually make them exported. When the prices locally are on the lower side, the commodities get exported, and when the prices are on the lower side, we see that the local prices go down. So we have to first admit that the system of buying and selling in the country is going on optimally. We have to understand that and accept that. On the second stage, if we really want it to be formalized, so that exports are done, or the citizens are given the proper prices for the commodities, the exchanges are there to determine those prices. As you said, that even in India, as I said, explained earlier, in India, 5% of the commodities that are produced in India are going through the exchange. The rest of 95% are just like the system in Pakistan. So we are not have nots, and we are not doing something wrong. We have to accept that the present system of RTs is an acceptable system, and the reason behind that is primarily now the prices are brought, or the prices are determined internationally of all the commodities that we buy and purchase in the house. So if RTs are not much the profit makers as they are accepted to be. On the flip side, we have to see that the taxation system has become so anomalous at the moment, that this taxation system cannot accommodate a common farmer to the official system. So we have to understand that we have made taxation so complicated now that a farmer would not be inclined to come. But on the flip side, we should come to the exchange, and we should ask, that some of the commodities should be traded on the exchange. And that is primarily for the benefit of the commercial banks. The commercial banks has a separate line of business internationally, and that is the electronic warehouse receipt, where they try to fund the farmers, and that is basically a business making for the banking system. And that is only the silver lining ahead. Then the banking system would like the exchanges to trade on commodities, especially the big commodities like cotton, wheat, sugar, they can be traded on the exchange, and then the farmers can get credit instead of going to the R3s. They will go directly to the banking system and they can get the credit. So as I said to you, we cannot say that the Pakistan system is a wrong system. We cannot really say with whatever productivity in Pakistan is based on the available resources that we have. You must have encountered many people from United Nations. They have come to the farming sector and they try to increase the yields. So we really need to accommodate a lot of technology, rather than going much to the research. If we just adopt technology and use that into farming produce, we'll get better produce. But just calling the present system as ineffective or incompetitive will not resolve the issues. We have to adopt technology. We have to increase the produce of the country. That is not primarily increasing with the exchanges or making it official. That has to deal with the technology. More technology we use in the country, it is better, rather than adopting the exchanges for the trade.
Yeah, that makes sense. You have to increase productivity first before you can actually trade that increased output. That makes total sense. So coming to electronic warehouse receipts, why do you think they haven't really taken off in Pakistan? I mean, we've been hearing about this for at least a decade at this point, and nothing really is working out. Why do you think electronic warehouse receipts have not really taken off?
Ammar, I fortunately heard you in some other programs. You said that there's a lot of cash in the country. So you see, it's a cash economy. So if there is a cash economy and somebody is willing to provide them unofficially tax, off the tax, money, and they are able to fund. For example, RTs are able to fund the farmers. Why would they go to the official commercial bank and pay hefty, interest rates in the country? And the banks are more inclined to to invest to the government rather than going to the farmers and risk their lending. So unfortunately, whatever question you think of electronic warehouse receipts, we have to think over that it's an official system and it's very well organized. I'm repeating, it's very well organized by the RTs to fund the farmers. Why would they come to the commercial banks for that? And even the commercial banks are not willing to come to the electronic warehouse receipt system, because they are having safe investment to the government. So they are not much inclined. Certainly the farmers do not have much good background to offer when the banking system is trying to give them credit. So not even the banking system has got this capability now to fund up the farmers. But at the same time, the farmers are not all even inclined to come to the official system and go through all those taxation measures, the recent taxation measures that are taken.
It's a chicken and egg problem. I mean, whether the cash in the economy reduces or the formal economy increases, it just works both ways. So I mean, I've been involved in this trade for a while now. In terms of the cost of borrowing, how much do you think is the an average cost of borrowing for RTs? Just a broad number would work here. I'm trying to
Really?
understand what kind of value we can generate by making things more formal.
Now we have to understand if there are RTs or they have become so big that they become the farmers themselves. So we really need to see the RT is a word since 1947. Now the RTs have made a lot of money. So they are the farmers. They have bought in the farms. They are like they are themselves funding their own business. That's their own equity. So I think that we have to understand this misnomer that there is some individual like RT. I don't think so. There are RTs anymore. They are all farmers, and we earlier they had a farming income that was not taxable. So RTs prefer, themselves to be called RTs rather than farmers, because the farmers don't have to pay tax and the RTs have to pay tax. So now the farmers prefer to become a farmer, so no tax on them. So really there is no difference between a farmer and an RT anymore. But if you are really asking what the tax, what's the interest that the artist charge, certainly that is determined from the market. If the interest rate environment is very difficult, as we see that the interest rates are 19.5% now, so RTs must be double than that. But again, that they take the lot of risk, because the farmers, the poor farmer, if we talk about them, the poor farmer, if he's unable to pay money back, so that is the risk. Even the commercial banks, if you ask them to lend somebody who has got nothing in hand, no pledge available, so even a commercial bank would not be willing to give them funding. But RT is there, he's taking double the interest rate, and he's like, able to fund that farmer. If he doesn't get produce, he gives, more time to the farmer to return the money.
All right, so essentially, Aarti is taking the risk here, and he obviously charges a fair price in absence of formal financial institutions to cover that essentially risk. All right, so how do we scale up farming? I mean, we all agree that yields are low, technology isn't there. How do we scale up here? You're saying Aartis are now in the farming business. That's great. How do we scale up? How do we go to the next stage of agricultural growth?
Now, as I discussed earlier, Ammar, you can see that the new technology has been adopted all over the world. So, we really need to see that the farmers should be able to adopt this technology. The farmers, if they are able to adopt the technology, the acreage will increase and they produce the economic situation will improve. So I think that it has to go through the government side. Anybody who's in the government and looking after the, agriculture sector, they should actually inquire and they should guide. There should not be a formal guidance, but there has to be an informal guidance with the farmers, the big farmers, and the government should see that, for to getting the good produce and to get the imports, to reduce the import and, to increase the export of agriculture commodities. I think that has to be an unofficial system from the government side, and they should ask the big farmers to use new technology that has been adopted. It's simply like, we are when we are driving an automobile that is run on petrol and the new automobiles are coming on electric. So how to encourage that, that use of electric vehicles that been used in, internationally. We have seen in, US or maybe China that most of the new vehicles are coming, are their automobiles are electric. So it's same as change in technology. They have to understand and they have to explain the farmers that they have to use new technology to produce. Technology means they have to the usage, the pesticides, the technology, the chemicals they use. They have to be the new advanced chemicals. Then the produce will increase. So we really need to see that the government is working on the right direction. Initially, we heard that some people are going for training in China. So if the agriculture people and the farmers go to China for training, it's good. They'll come back and they'll just try to increase the acreage of the country. But we really need to work on this, that we have a potential to increase it by 3-4. So we should use international technology, and we should use the chemicals that are used globally, and we can use that on our farms and improve the acreage. And I think the government has a role to play in that. They have to give some kind of leverage, rebates to the farmers, so they use the better technology, they've used the better ingredients to the produce, so they are able to increase their productivity. And they use advanced technology when they use on the present land, they'll be able to get better produce, I can say.
All right, this makes absolute sense. So, Ahsan, what do you think needs to be done on the energy front? Now, we trade a lot of energy contracts as well, I believe, on the exchange, and a lot of those are traded essentially following the international market. Do you think there's any scope for trading in local energy contracts, or since we are a major importer, it doesn't really make sense?
I think that there are not much to offer, because we have to, whatever we offer, we have to see the exchanges, the success of other exchanges. What we have seen in, for example, India or international exchanges like Chicago Mercantile Exchange, they usually trade, in crude oil, or for example, they use in they trade in platinum, palladium, and silver, and these the commodities other than soft commodities. The trade is primarily driven by crude oil and the Brent oil. We can just ask the institutions which are buying on the higher side, because we have seen there's a lot of uncertainty going on in the regional front. The institutions here, like petroleum companies, can come to the exchange and they can buy energy contracts and they can hedge themselves. Earlier we heard that the oil prices went to negative $20 in the last 3-4 years. We saw that when there was a COVID and there was an excess supply, the crude oil prices internationally were negative. So they could have gone long for years, from the exchanges in Pakistan, and they could have, hedged themselves at a lower prices. Now the prices are on the higher side, around $80. The Brent is trading, and they can come over, and if they feel that there is a war-like situation going on, all over the world, the petroleum companies can come and hedge themselves to this price for a longer period. In that sense, the price will be, locked at, lower prices. And when the war-like situation comes and the dollar, the Brent prices cross $100, they'll be hedged at $80. So, this exchange provides a platform to the institutions which are actually engaged in the import of steel products. They can come to platinum or palladium, and they can hedge themselves. If they are engaged with the petroleum products, for example, like petroleum companies, refineries, they can come and hedge to the exchange, and they can hedge in crude oil and Brent oil. So that is an option available. So I think that the day trade in the exchange is around 30 billion, and in that 30 billion, about 6 to 7 billion is traded in crude oil. Certainly, the industrials are hedging themselves. The small traders or maybe medium scale, investors are actually hedging themselves. The industrials, which are actually dealing with the USD, for example, they hedge themselves to forex in the exchange. So there are a lot of platforms for the industrials to hedge themselves. And then eventually, when the prices rise, they're able to benefit if they have purchased already on the exchange.
Yeah, this makes a lot of sense. So you think there is a lot of industrial uptake of this product as well, and companies are actively utilizing these for hedging their exposures?
Yes, I think that on the medium scale or on the small scale, this is happening. But unfortunately, on a larger scale, like for example, PSO, if it buys, for example, $3 or $4 billion oil, from the foreign countries, they will be able to hedge themselves earlier in this exchange if they have an idea that they see that the prices would rise. Because as I said to you earlier, when the prices were negative $20, this exchange was offering around, $2 or $3 crude oil, just 5 years back. So if they hedge themselves for long, like PSO hedge them for long, and if they import for $5 billion a year, the pricing would be around zero for them, and that $5 billion would have been the income of PSO. So what I'm trying to tell again, that if these big companies, which are mostly the state-owned enterprises, if they are allowed to hedge themselves to the exchange, they can come over and they can hedge themselves, and they can reduce the cost when the when the price rises. They can make huge. But you see, these institutions are not allowed to come to the exchange and hedge themselves for future contracts. Maybe they have some board approvals that have to be taken, or they don't take that risk anyways. But at the same time, the medium and small enterprises, the small industrials, they take the exposures and hedge themselves even to forex, like Australian dollar, or for example, US Swiss franc, or maybe US British pounds. They are also available, and they could be hedged in addition to the metals that you're talking about.
Okay, this makes sense. Any words of advice that you may want to give to the government? Any suggestion on taxes, on how exactly we can actually create a more, let's say, vibrant market for commodities and the exchange?
Have to encourage the buyers of gold to come to the exchange and buy gold from the exchange rather than going to a small retailer. So that will provide them an official receipt of gold when they buy. So a common man could come to the exchange and buy gold rather than going through the markets, available markets, and they can get an official invoice that they come to the exchange. So my advice to the government is to discourage the local jewelers to sell bars of gold, and they just go to the exchange and go and recommend them to go to the exchange and buy the bars if somebody wants to make an investment in bars. The jewelers are okay because they convert it from gold or bars to the jewelry, so everybody would like to wear it and they would go to the jewelers. But at the same time, if somebody wants to invest in bars, they should come to the exchange and get the official receipt. So in that sense, the country should have an official reserve, and everybody should know what kind of reserve the country has in terms of gold bars. So the government to play this role, that they should disallow the common jewelers to sell gold bars, and they should actually encourage the common jewelers to become member of the exchange, and which is very easy and very, very cheap. And they can then sell the bar through the exchange, so they get the official receipt. In that sense, they become owner, and they become part of a taxation system, an official system. I think this effort the government can do to make the gold trade official in the country.
Just to clarify, what will be the difference between the official rate and the rate in, let's say, in the Sarafa Bazaar?
Usually the rate in the exchange, actually we have seen that it's quite less, because at times when the international prices go down, for example, when it's selling, we see the exchanges adopt that price earlier rather than Sarafa. Sarafa market is updated the next day, and the prices in the exchange, they go down, and that happens once or twice in a week, that the international prices go down, but the local prices are on the higher side in Sarafa, because that get updated in the next day. So I think that is the right time to buy the exchange. In the exchange, the common customer can get a lower price as compared to the available price in Sarafa. In that sense, they get an official receipt as well. At the same time, they come to the exchange, and it's a pure. It's not a fake gold, so that is properly stamped by the exchange, and the purchase is officially recorded. So in that sense, the local customer can get a better value of money, because they'll get the right gold, and they'll be able to manage that officially.
Perfect. Thank you, Ahsan, for your time. This was very, very helpful. We don't really know a lot about commodities. It's just always operating in the gray. So this is very helpful in whatever you've been able to
Thank
explain
you.
to us. Thank you, Ahsan, for your time.